Hello, everybody. Welcome to another weekly market news. Today is Monday, first day of February, and we are beginning the new week with a lot of question marks. About the health of the stock markets, as last week was extremely volatile. We experienced some various sellouts on stock indices, and everything was powered by speculative investors. As we're going to look at it a little bit closer. So as you can see ahead of you as a chart of index S&P 500, overall pretty negative week. If we look at the 4-hour chart, we can see that we were able to close one of the worst weeks since October, which was also a huge volatile week, and as well as we closed losing week last week. We also closed a negative month of January. So this is something that obviously the stock markets were not expecting. I'm pretty sure that most of you already heard what was the catalyst of those moves, mainly in the second half of last week. Like said before, there was a huge speculative investors kind of battle against the hedge funds, because there are certain stocks like GameStop, AMC, Bed and Beyond, which are heavily shorted, and the short float is tremendous, which didn't escape the attention of retail investors, and those kind of took advantage of some of the knowledge, and they started to long these positions, started to put some long positions on those particular stocks, and in huge volumes, which drove the price of those stocks extremely high. And once they were at a certain point, those hedge funds who heavily shorted those positions were forced to close the positions and kind of create like fake demand for the stock, which drove the prices of the stocks even higher and led to these unacceptable events. So that's something that's a source of, like I said, nervosity on the markets, and some source of doubt on the market, because we can see that it was extremely negative for a certain period, as there was a fear about the financial situation of those hedge funds, which might be forced to sell other positions in order to raise cash, because they were losing money on those particular stocks like GameStop and AMC. So extremely interesting week on stocks. In the other hand, we had earnings from several major companies. Tesla reported around 500,000 cars produced last year. The profit was a little worse, but overall quite positive report, as well as Apple. Apple reached and surpassed $100 billion in revenue in one quarter, to the first time ever. So we can expect from Amazon this week another extremely positive report. Other companies also reported better than expected earnings. Facebook also, but in the other hand, warned that the second half of this year, 2021, can be quite challenging. So those are the major news from last week. Was basically the earnings were not that important for the markets, as those events which were, as you can see, not expected at all. So we closed a negative week for S&P 500, for Dow Jones, for DAX, also a negative month, as well as if you look at the Nasdaq, obviously he was able to close in a positive territory last week. Let's look at the markets, of the stock markets ahead, what we are expecting, because the earnings season continues in the United States, and we have some major companies to report, like Alibaba, Amazon, Alphabet, ExxonMobil, British Petroleum, Chipotle. There's PayPal, Spotify, Pinterest, Snap. Uh, Particularly Tuesday will be interesting as Alibaba, Amazon, and Alphabet. Also, Pfizer is reporting some of its own earnings. There's also T-Mobile, Aeon. So another extremely interesting week for stock market. So we will see how this thing will play out, and also how this thing with Reddit, Wall Street bets, and those social media investing will affect the market in the week ahead. So that's something we have to count on. We will see how the SEC and other regulators will work with that. If they will work somehow, we'll have to wait and see, and look what is going to happen in the week ahead. Like I said, on European indices, the week was also quite negative, as we are used to seeing it on DAX. Very volatile week. We beginning the week with some gains, which was also mainly the result of buy the dip on the market. So right now we are positive. We will have to wait and see how this thing will play out and affect the market in the coming sessions. As we look at the Forex, last week was, like I said again, quite volatile, as US dollar was in under pressure. Then was huge demand for him. So as the money were coming from one area of the markets to another, this led to some demand for the dollar, which was increasing, then decreasing. As you can see right now, it's increasing again. So there's some source of nervosity on the market. So nothing is okay yet. You can see Euro decreased under 121. We'll have to wait and see how it will battle with the lower levels, as we are testing right now a major support area on Euro USD. GBP USD, on the other hand, last week was again positive. It's still relatively strong. It stays relatively strong. So again, no surprise for us, as we still expect from GBP to surge a little bit more. You can see there are some gains in the beginning of this week. On the other hand, you saw what happened on Euro. So a British pound is staying somewhat strong. USD CAD also a little bit under pressure for about 2 weeks, but Friday session was in. There were some gains on Canadian dollar, going sideways right now. So we will see how anything else could affect the market in here. Gold and silver is also extremely interesting in the last few days, as the situation on gold is not really particularly that interesting. It's influenced by the moves on silver. Because silver is also one of the markets that is heavily how to say it? It's heavily under influence of social media investors from Reddit and Wall Street bets. They placed target price for silver to $1,000, extremely high, and the demand from the speculative investors is driving the prices of silver from the end of the last week. You can see we're consolidating for most of the weeks here, stopped a little below $25, and right now we tested on Monday a level $30 for one ounce of silver. You can see on the daily chart, right now we are testing the multi-year high, which were created here in August. So we'll see how this thing will play out with the Wall Street bet investors. Obviously, many things can happen. This can break through and rally even more, or there can be a huge sell-off on the market with silver. Like I said, let's look at the oil, which has not surprised us not one bit in the last week. We still do not expect anything major to come, but the consolidation here that is happening is taking some time already. So the longer it goes, the longer you can expect some moves to come. So fundamentally, it does not have any space to go even higher or lower, but at the same time, technically, the market is going in stairs. It's going one stair up, like here. It's going one stair up, going sideways, up, sideways, up, sideways. And what will happen here? Don't know. Fundamentally, it doesn't make sense for oil to surge any higher. At the same time, anything can happen with oil and some new strain of COVID, which is obviously affecting the markets and the outlook for demand. So everything can happen here, and even oil can go for lower prices as well, and you can maybe test the $50 per barrel or per barrel on oil WTI and test these lower levels. We'll see how this thing will play out in the week ahead. And like I said, Nasdaq closed negative week, although quite positive for the month of a bit positive for the month of January. But overall, we will see Apple has reported strong results, as well as Facebook. We'll see Alphabet and Amazon to report their news, their earnings for fourth quarter this week. So that's pretty much it. What was happening on the markets? Let's look at the macroeconomic calendar for the week ahead. On Monday, as usual, we do not expect anything interesting. Expect the ISM manufacturing PMI from US. Then we have Australian Central Bank on Tuesday, as well as an employment change from New Zealand, but nothing really that interesting on Tuesday. A lot of secondary data on Wednesday. We have market PMIs from several European countries, so this will be interesting for the beginning of this month. See if anything has changed from the month before. Then we have CPI data from Eurozone, nothing that should really affect the market. We have service sector PMI from US, ADP non-farm change employment. On Thursday, we do have retail sales, interest rate decision. So Bank of England is going to have its meeting, so this will be interesting. Supported by Bailey speech in the afternoon. And on Friday, we have most anticipated macroeconomic news for this week, which will be NFP data and job data from US as well as from Canada, and the rest of the session. Expect the Canadian IVPMI and at 4 p.m. Should be quite quiet and should not rattle the market too much for the week ahead. So this will be it for today's video. I hope you guys enjoyed. If you have any questions or anything, leave it down in the comment section below the video on YouTube, and I will see you next week.